Good evening and welcome back to my YouTube channel today. My name is Moyo Mamora and words cannot express how excited I am that you all have decided to tune in today. I know a lot of us are stranded at home right now due to COVID-19, and truly there's been a whole lot going on in our world today. The economy is down and over 280,000 people have filed for unemployment. But it's pretty interesting that Robert Kiyosaki says that this is actually one of the best times in history, which is interesting to me. But the big question is that true? And if so, how can you take advantage of today's economy? So joining me on the discussion today is an amazing person. His name is Moyo Mamora, and he has a wealth of knowledge about the financial market. Aside that, he's also had over 10 years of experience in real estate investing. So welcome to my channel, Moyo. Can you go ahead and just tell them a little bit about you?
Sure, Dahun. Well, thank you for having me. Yeah. It's a pleasure to be on your show today. So, of course, as Dahun said, my name is Moyo Mamora. I'm a finance professional, strong real estate background as well, but have a very strong interest in financial markets and the real estate markets and just overall investing and wealth creation ideas. So happy to discuss with you and answer any types of questions you may have.
Yes, and honestly, one of the reasons why I really wanted you to come on this channel today is you got the opportunity to experience the 2008 recession.
Yes, I did.
Of course, yes, that was your first recession, I would say, as an adult. So I'm pretty sure there was a lot you learned during the recession, because as a millennial, I'll be honest, I'm super...
Hey, I'm a millennial.
I mean, okay, I know you are, right?
Saying.
But I would say like this is actually my first recession as an adult, and I'm really nervous. I'm about to, I'm actually searching for jobs right now, and there's just been a lot going on through my mind. Yeah. So the big question I have for you is, what were some of the mistakes you made in the 2008 recession, and what have you learned that people should practice today?
Yeah, so it's a few different things. One I'd say is poor financial management on my part, right? Because you always have to understand what you're earning and what you're spending, and at what point how much can you sort of stomach risk to the point where it actually becomes detrimental overall to your financials? And understandably that, there are certain events that you can't really predict and you just wouldn't foresee. And I think the financial markets crash in 2008 was just one that was difficult to actually model. But that said, another thing that I'd say was a mistake on my part was, or I should say I learned was, you don't necessarily take out money because investments are falling, right? You only record if you make an investment, if you make the investment as a good investment from the onset, right? Because of mispricing, or meaning like you're seeing a fall, using the stock market as an example, you shouldn't necessarily cash out, because when you do that, you're actually locking in an electronic loss that you didn't have. But didn't have anyone to guide me through that process, because fundamentally prior to the crash, a company that was a good company prior to probably didn't have a lot of fundamentals change. And this is a little tricky because 2008 was weird in that there were some sort of real issues that certain types of companies faced. And part of the problem was no one knew how to price these assets or value these assets back then. So, just sort of take what I'm saying from as a framework. Third thing was I didn't really have proper financial guidance. So I was sort of a lone ranger on my own trying to figure out the entire situation. I wish I had someone to guide me through the process and help me answer some questions and give me insight on what I needed to be doing at that point in time. But in retrospect, a few years after, when I got back on my feet and was able to look back 2020, one of the things I said to myself was, Lord, if ever there's an opportunity that comes like this, may I not be found wanting.
And it's great that opportunity is happening today.
So is what we're kind of seeing right now.
Yeah, so you spoke about you wish you had the financial guidance.
Yeah. So
people today, where do you feel they need to seek out that financial guidance?
Yeah, so good question. 2008's very different from 2020 right now. It's 12 years ago. how it's in your face today just wasn't, out there as much back then in 2008. Now in 2020, you have a lot of financial coaches that are out there. I think it's prudent for every single person to get a basic financial education. It's not something you learn in school, but it's, you have a personal responsibility as you think about yourself, your future, and what you intend to do with your life to actually get that basic financial knowledge. It's very prudent to do that. So there are resources online that, I'm sure you know the famous financial coaches that are out there. You can get those. Many banks right now, just because of how steep the competition is right now, many banks actually offer like financial advisory product as well. There are other financial institutions like wealth management organizations that provide that type of information. You should get that from a professional standpoint, but also there's also some level of, if I can use the word, street smarts that's out there from people who aren't necessarily certified professionals, but they've gone through experiences, they've come out of experiences, they can teach you what they know. They're consuming information and they're like synthesizing it and they're regurgitating it to people out there and making it plain and simple for you to understand. So just like be careful, but get that knowledge, and I think it'd be helpful for everyone.
Yeah, and while you were talking earlier, there was something you mentioned, right? That even though the market is crashing, you're not going to go ahead and start taking your money out. So can we talk a little bit about the concept of timing the market? Because it's funny that a few weeks ago or so, I was actually watching a YouTube video, right? And the person was basically talking about their financial strategy, and they mentioned that what they try to do is, rather than, of course, one, like dumping a lot of money in when the market is crashing, they just study the news, right? And try to find the right time to put in their money. So they said, for example, with the coronavirus situation, they would just try to study, okay, what is a sign to prove that this situation is ending? Is there a vaccine that is being invented? And then dump your money in. So what's your advice, based off on that?
So my first advice is, statistically, timing the market is a stupid idea, right? Because and I have to be that brash, because so Daniel Kahneman, who was a Nobel Prize winner, he wrote this book called Thinking Fast and Slow. And he's not the first person to come up with this research, but part of the ideas that he puts out there is people are very terrible in timing the market, right? Just because the market is random, right? And there are other like thought leaders and academics who have actually studied this phenomenon. And the fact is you just cannot time the market. That's number one. So any attempt to time the market is a futile one. So that if you can't time the market, then what should you be doing is you should just have a deliberate and consistent practice of investing. That's what you have to do, because if you did that, it wouldn't matter if the markets are up or if the markets are down. You just have a consistent discipline of actually investing. That's number one. The second concept, which you sort of alluded to, is someone making the statement of you just don't want to dump the money in right now, you want to wait for the right time. Well, now, I get that. I think the idea here is, if you probably heard the phrase, you don't want to catch a falling knife, right? And that, that sort of makes sense. I get it. You don't want to catch a falling knife, and because you just don't know how much worse it's going to get. But if you're not trying to time the market, then that shouldn't matter. You see what I'm saying? It shouldn't matter, because your discipline is consistently invested, right? So you're not trying to catch so the idea of catching a falling knife is you're trying to time, can I grab it on the handle, or am I going to grab it on the blade? But that said, there's some times where it's like, man, you just want to damn the consequences and just like catch that knife, right? Even if I get cut, it's okay catching the knife than actually just not catching it at all, right? And it's a risky proposition, but sometimes it's actually worth taking that risk. Now, the one idea I'd want to leave you with is, as it relates to timing, and someone saying you want to wait for like a vaccine to be released. Well, so sometimes the market is, again, I'm using the market as an entity, and it's a collective bunch of people, but sometimes people sort of have a foresight, and it's the collective behavioral thought of a bunch of people, and they sort of agree in some sort of quote unquote efficient way about what the price of something needs to be. Now, if everybody sort of feels like a vaccine is coming out soon, right, and then the market adjusts. So for example, the market fell 30% as of last week, and when I say the market, I'm talking about the S&P 500 index, which is a broad basket of stocks, right, fell 30%, which is a huge fall. Now it went up about 10% or so in this week. But so if you're trying to time the market and you're saying to yourself that, okay, well, there's a stimulus package that came out from the White House, then maybe this is a good time. Well, you don't know. Well, there are a bunch of different things that would subsequently happen that may cause it to fall. I mean, we still need to hear, the economic impact of the COVID crisis. Companies will still need to report and let us know how bad it impacted them. So how do you time all these things? You can't really time them. But last thought, and I'll keep quiet here, is there's a book that I read by Howard Marks. It's called Mastering the Market Cycles, and it's not really so much about timing. But one of the ideas here is this, and you probably heard Warren Buffett say this, is that you should be greedy when everyone's fearful, and you should be fearful when everyone's greedy. And Howard Marks in his book said, risk is at the highest when everyone is most comfortable.
Yes.
But it's actually at the lowest when everyone is most scared. So it's sort of a contrarian way to think about markets and investing. When everyone's like, oh, I don't want to put my money in the market, that's probably when you should be thinking, probably a good idea to put my money in the market right now, right? Because risk is probably at the lowest.
Wow, that was super helpful. So I'm hoping that has kind of changed some people's mentalities. So for people that do not yet have the money in the market, what's your advice on how to pick stocks? Like what segments to look into in deciding that?
So here's another thought. Picking stocks is actually statistically not a good idea versus actually like investing in what's known as index funds and broad baskets of stocks, right? Because statistically it's difficult to actually pick individual stocks, and the risk of picking an individual stock versus buying a basket of stocks is actually higher, right? So let's start out with that and leave that thought here. So for a person who's new to this, again, first thing I said is make sure you get financial education. Second thing is get general investing education, and there are things that go along with that, right? Understanding investments, understanding returns, understanding the timeline, understanding risk. Get that knowledge. There's so much information out there in terms of like books, shows, things you can listen to, podcasts, etc., that you can learn a little bit about that stuff. Now, there are, if you talk to a financial advisor, your financial advisor, or your financial institution, they can get you someone to talk to. But there are also these things called robo-advisors or electronic wealth managers that you don't get this person-to-person feel. It's like it's on an app again, right? So it would profile you, get your risk tolerance, etc., and based off of that, you'd put money in there, and it would help you with picking out a mix of different stocks. That's what I would recommend for a new person, right? Because then you're not trying to pick a stock, right? Now, if you say, you know what, I want to be a cowboy and I actually want to pick stocks, right? So what I do here is this: you think back and pre-crisis, and you say to yourself that, what were some of the companies that I thought were good companies, that I understand their business, I know what it is that they're doing, right? And you look at where were they prior to the crisis. Ask yourself, go through this thought exercise and say, how does this impact them? Some of them would have very little impact financially. Others have, so like the airlines, for example, are taking a huge hit. Like no one's flying, like the whole recreation resorts, things like that. Those would take a huge hit now. But there are some that may have been very good. I would still think about adding them to the portfolio, but you also have to be prepared for the idea that, they may have taken a huge financial hit that may be detrimental to them for a long time. And you also want to be sure that these are companies that would last, right? And would still be ongoing companies. So were they good companies? Did they make sense as businesses? Because all that has happened for the most part is yes, there's real sales, economic impact to these companies, but if it was a good business prior to, it's still a good business now, right?
Yeah.
It's just like, yeah, we just hit a snag, but the stock prices will still come back, right? So you think about it as the market has put certain companies on sale. So you have to think like that in categories. So for me, the ones I like advertising companies that are great, that I like, online advertising companies that are taking a hit. I like some of these fast food chains that, that everyone would go to for lunch, but they're not going to right now anymore. And there are a few others, but essentially that's the framework that I would use to think about it.
Wow, that's interesting. And something you mentioned that I really liked is even though the market is down, it's still going to bounce back. I think that's really encouraging. After watching this video, I really encourage everyone to look at the S&P 500 trend for the past. How many years will you recommend?
Let's say look at 25 years. So if you go to finance.yahoo.com, you see like an S&P 500, and you can click on that chart and just like blow it out, right? For like the past 25 years, you'd see ups, downs, but on the average, what you see is it's slanting upwards.
Exactly. Thank you so much for that. So now let's talk real estate.
Yeah, sure.
Right. So of course, based off on everything that is going on, the real estate market has kind of been impacted because number one, Airbnb has changed their policy so far that is making people do free cancellations. Of course, due to the whole coronavirus scare, not as many people are going to check out homes as much as before. So for me, I'm thinking, okay, this will probably be good news for people that are trying to buy new homes, because if not as many people are going to check out homes, right? Demand is less, prices will go down. I don't know. So I'm just curious, what are your thoughts? Do you think there might be a real estate market crash? I just want to hear what's going on in Moyo Mamora's head.
Yeah, so if I had a crystal ball and I could look into it and tell what would happen, man, I'd be on the Forbes 400 list for sure, right? So real estate tends to lag markets in terms of like if something goes down, like what we're seeing. You necessarily would not see the impact to real estate until a few months after, right? If any, right? So, and again, it sort of goes back to this idea on timing. I think historically we've had the longest market expansion ever, right? Prior to what happened in the COVID crisis. So from 2008 till about 2020 right now, when we see what happens. Now, real estate prices increased. All I'm trying to say is I don't know. I would think so, right? That there'd be a little bit of impact because there'd be people without jobs. So buying activity, like you said, is slowing down right now in this season. But then what tends to happen is people tend to contract in times like this and they want to save more. They don't want to, it's like a huge economic scare. So people deplete their savings. Maybe someone who was trying to buy a house and had thousands of dollars for down payments, and maybe they lost their job. Now they'd have to take out of those savings to actually like pay their current rent, and people downsize and things like that. So yes, one could think that you'd expect some softness in the market, but again, like I said, real estate tends to lag. So the same way sellers tend to like hold out as well, except they actually have a major financial impact and they're forced to sell. So you sort of don't know, but I think intuitively, as you're trying to get to, I think you can expect that there probably will be a softness in the real estate market.
That would be amazing. That would be so amazing.
Wow, so that was super insightful. In concluding this video, do you have any final advice for any of our viewers?
Yes, a few things. Get financial education, right? Learn about investing, understand the rules of money for today. Be focused on acquiring assets, have a consistent discipline investing, right? So don't try to time markets, but just have a consistent discipline where you say, I'd take away a portion of my income every month and I'm going to put it to some type of investment, or I'm going to save some money so I can buy real estate. Real estate is actually a very, very good investment, and it's one of the ways that has created wealth for a lot of people in this country and actually worldwide and globally. I think if you do those things on a consistent basis, you're on the right track to actually creating wealth for yourself, for your family, and for the generation after you.
I know I'm not a financial expert at all, but I just want to add something to that. Based off on one of the videos I was watching by Robert Kiyosaki, something he said is that your greatest asset is your intellectual properties, your head. I'm trying to do this myself, so I just really want to encourage you all to just think about ways you can be innovative in this period, because this is going to be an amazing season, an amazing opportunity to develop a product that will be a solution to a currently existing need. Well, anyways, thank you all so much for tuning in today. If you have any questions at all for Moyo Mamora, feel free to comment below. Make sure you also follow us on Instagram. So I'm going to put my Instagram handle below, and do not forget to subscribe to my YouTube channel.
Subscribe.
Please subscribe, share this video to help someone else out there. And once again, thanks a lot for watching. My name is Dahun Mamora, and have a good rest of your week. Bye.